Happens all the time. Somebody comes to me from H&R Block. They filed a tax return incorrectly. They missed a foreign informational filing, whether it was for a foreign corporation, foreign trust. They missed that filing. And now they're subject to $10,000 minimum penalties. In a lot of cases, it can be a lot more than that. To get out of that penalty, the only option we really have is a reasonable cause request to say we had some reasonable cause. Like we tried to do our tax return correctly. We hired somebody and they did it wrong. It's not our fault. Time and time again, we've seen that reliance on a tax preparer does not meet the standard of reasonable cause. It's your responsibility to hire somebody with the right experience that can do the tax return correctly. If you go do TurboTax online, the fact that you expected doing that to be able to tell you what your international filing responsibilities were is not reasonable cause in the eyes of the IRS. So you have to be really careful doing international compliance with a cheaper service out there. I'm not saying you can't do it that way, but it puts more of the burden on you to know what you have to file and when, and tell those people or that program what it is, because they're not necessarily going to tell you, especially if the facts change. You buy something, you sell something, somebody dies. You need to know how that changes your filing requirements if that happens. So I'm not saying don't use a cheap service necessarily, but I'm saying that just know that puts more of the responsibility on you. And in my professional opinion, at least get somebody to review what you're doing yourself. Generally, the people that are coming to me after they've discovered that there's a problem, or they come to me and realize they start asking questions to their accountant and realize this person isn't really giving me the confidence that they know how to answer these questions. So then they come to me and I give them those answers, and there probably is a problem with their past filing. I mean, a good example is I have a client that invested in a rental property outside the US, and they have a local business in Carolina where, you know, they've had that for years. They've had a local accountant who does a great job with their work. They have a very good relationship with them. They do all their business accounting, personal accounting, but then they go and invest outside the US in a rental property. That accountant doesn't have any other clients that have that situation. Accountant automatically knows this is outside of our league and, you know, you need to go find somebody else. But a lot of times that's an important client to that CPA firm, and they don't want to lose that client because they do a lot of work for them over that one international piece. So they'll try to do it themselves. I don't mean to say that it's like they're intentionally doing something wrong, but they just don't know what they don't know. Just like if somebody comes to me and asks me, you know, about business valuation questions, I just don't do that work. I'm not going to know the answer to those questions. I don't know what I don't know. And it's the same thing with international tax work. If you don't do it all the time, you're not going to know what that is. People come to me and we're unwinding that problem. So, I mean, a lot of what I do too is just work with other CPA firms to do their international piece, because it's very hard to switch relationships from an accountant to somebody else, especially if it's somebody you've been working with for years. So I like for people to be able to preserve the relationship they have with their accountant, and to the extent it makes sense, me just come in to help with the international piece. But I think the point is that you can have a great accountant that doesn't know international tax work. When you start moving into that world, you really need to find somebody that does that type of work so that you're not subject to unnecessary penalties. Especially when I work with people in Costa Rica in rental properties outside the US a lot of times, or if they're just, you know, going on an adventure and moving to a foreign country. These aren't international business people, you know, I mean, not to like downgrade that by any means. I mean, they're just normal people that all of a sudden have an international aspect to their life, and the accountants they've been using in the past in their local town or wherever, that's not what they do for a living. These aren't international tax accountants either. Even though it doesn't seem like there was a big complexity change in your life when everything stayed the same except now you own a property outside the US. That changes somewhat significantly the reporting requirements on your tax returns, and it definitely has a significant impact if you don't set it up correctly on the front end. I mean, to me, it's no different than starting any new venture. You know, you really need to make sure you get everything set up and structured properly on the front end, or it just costs way too much money later to fix things. Because I end up doing a lot of fixing. In some cases, there's not a whole lot to fix. You know, like I have some clients that, if you're liking this video, you should really check out my newsletter where I put out different tips and tricks, latest law changes that can really help you save money and save complexity if you're living or investing abroad. Just think how much you could save with the right tax advice. They set up foreign corporations 20 years ago to hold their property, and now they want to sell it. You know, we can't go back 20 years to make this foreign corporation not a foreign corporation anymore. It just is what it is. You know, if I would have done it originally, I would have made it a flow-through election, and now this couple gets to utilize the $500,000 exclusion on principal resident, or they get to keep capital gain treatment. Now they're paying 37% tax on the sale of their home because it wasn't structured properly on the front end. And it's not a hard thing to do on the front end, but it can save you a ton of money at the end. It's the same thing, not just for real estate, but also for, you know, international businesses and things like that. You can't assume it's going to work the same way as it works in the US for general businesses, because it just usually doesn't.
So TurboTax doesn't ask you that?
TurboTax will ask you about foreign assets. They'll ask you about foreign bank accounts. It does ask you about foreign trusts. There's actually a case out there right now for somebody missing a Form 3520 on inheritance. There's a Chinese family that moved to the US, received an inheritance for paid for their wedding. They didn't file a 3520 because they did it on TurboTax, and then they went to an accountant, filed it late. There's I think like a $25,000 penalty that they got assessed just for filing it a year late. Their argument to the US was that TurboTax asked if they had received a foreign gift. They said yes, and it didn't trigger a 3520 on the form. The TurboTax asked the question, but it didn't go the next step of actually prompting them to fill out the correct form. That's their reasonable cause argument, among many other arguments. When you get those type of penalties, you throw the kitchen sink at the IRS and hope that one of those arguments sticks. But unlikely the reliance on TurboTax is going to be the thing that gets them out of the penalty. And I think these programs are getting better. They're asking more questions, but at the end of the day, the nuance is going to be lost. You know, I mean, what if, for example, this person receives gifts from 3 unrelated people for $50,000 each? The rule is you have to file a 3520 if you receive a gift from a person or related persons of more than $100,000. So in that case, there's no 3520 requirement if you receive 3 separate $50,000 gifts from 3 unrelated people. But the odds that TurboTax is going to layer into their questionnaire that type of nuance is pretty unlikely. And I mean, I said it the way that you didn't have a requirement, but what if the other way around would be it's triggering you to think you don't have requirements that you do? At the end of the day, it's going to be hard, I guess, to put it simply. The way our tax system works in general, and in more particularly the international workings of it, is very hard to put into a simple computer code of question, answer, question, answer. It's just not that simple at the end of the day. And I think the IRS is determining in a lot of their case law that expecting it to be does not satisfy the reasonable cause requirement to get you out of penalties. If you have questions about your international activity, if you're living abroad, if you have foreign investments, foreign assets, foreign companies, don't just assume you're going to get all the right answers on ChatGPT or Google. Reach out to somebody that has experience doing international tax work. Of course, we're happy to help you at McGowin Tax. You can reach out to us directly on our website for a free cross-border tax diagnosis. If you want to check out our YouTube channel, you can find other good tips and tricks about filing your taxes with the US as well. If you're enjoying this video, please take a minute to like and subscribe to our channel and leave a comment below.